Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Wednesday, July 14, 2010. Let's start today's broadcast with a look at the dollar-yen pair, where we saw the dollar fall against the yen, first overnight and then following U.S. retail sales data and then the FOMC meeting minutes in New York afternoon trading. We went from a high around 89, which was close to our high on Monday, down to our low from yesterday around 88, which also coincided with the 200 period moving average in a 1 hour time frame. The gains in the yen represented investors taking some risk off the table following the data, as it could mean some weaker growth in the US as well as overall global growth. First, let's take a look at the meeting minutes. In those minutes, Fed policymakers noted a relatively modest worsening in the U.S. economic outlook and said further monetary stimulus could be needed if the economy showed more signs of slowing, though policy accommodation beyond what was in place already was not necessary currently. The Fed stance was sort of expected following a string of worse than expected indicators of the U.S. recovery, which included today's disappointing retail sales report. Indicators in the recent month and a half that have put a damper on U.S. economic outlook have come from housing and employment. The Fed trimmed their growth forecasts for this year, projecting GDP will expand between 3 and 3.5% this year. Growth forecasts at the previous Fed meeting in the spring ranged from 3.2% to 3.7%. Earlier in the day, we saw a report that showed U.S. consumer spending continuing to ebb in the second quarter, as June marked the second month of declines in retail sales. Consumer purchases were down 0.5% for the month, following a 1.1% slide in May. The June figure came in below expectations. Excluding autos from the equation, sales were down 0.1%. The headline retail sales figure includes sales of gasoline at filling stations, which fell 2% in June as prices of gasoline fell during the month. Excluding autos, gasoline, and building materials, which is the measure used when calculating GDP, sales rose 0.2% after a 0.2% decline in May. That shows us that the headline figure was strongly impacted by the drop in gasoline sales as well as weaker auto sales. Looking at the euro-dollar pair, in today's trading we moved above the psychologically key 1.27 mark after we had gained very strongly in yesterday's session. The euro managed to keep its gains after it ticked down on the release of the FOMC meeting minutes. The euro was higher today as Portugal sold more than it planned at a government bond auction, joining Germany and Italy in garnering solid demand for their combined 12.5 billion euros in debt sales, further allaying fears that weaker Eurozone members may struggle to tap public debt markets. Portugal sold 1.68 billion euros of two of its government bonds, above the maximum intended of 1.5 billion euros. However, those sales did come at significantly higher yields than at previous auctions, and the timing was rather poor, as they came just a day after Moody's downgraded Portugal's rating by 2 notches. If we take a look at the euro-yen pair, we see a bit more of risk being taken off the table, especially prior to the open of New York trading and then following the U.S. retail sales release, as we move from around the 1.1320 level, our high overnight, down to 11210, which came close with support coming from our short-term and medium-term moving averages in the 1 hour time frame. Following a rally again as U.S. stocks recovered from the morning, we fell following the FOMC meeting minutes, but following the close of the New York equities, we see the euro rallying once again. So a bit of a choppy session, but we could see that throughout most of the New York session we did have some risk aversion, which wound up helping the Japanese yen. If we take a look at another risk sentiment sensitive currency, Aussie yen pair, we see following our pretty strong rally yesterday, moving us above some resistance. We fell in today's trading session during the New York trading session. Now, the Aussie is tied closely to global growth concerns, and if we have a weaker U.S. economy, it could mean overall weaker global growth. Therefore, we saw traders moving towards the safety of the yen during today's session, but as we can see towards the tail end, we see the Aussie already making up some of its lost ground from earlier in the day. Turning to the pound-dollar pair, we saw the Pound gained today, extending its sharp rise from yesterday's session as we moved above this 1.5220 area, which had been strong resistance during last week's trading, as we had tested it 3 times and were unable to move above it. But in today's session, we did manage to break above that resistance after we had a rather positive employment report from the UK. We hit the 1.53 level, tested that as our resistance, our high for the day, and came down slightly following the FOMC meeting minutes in New York. Looking at that employment report from the UK, the claimant count, or the number of people seeking jobless benefits for June was at 1.46 million, down 20.8 thousand on the previous month and down 100,000 on the year earlier. The claimant count rate was at 4.5%, down 0.1% from the previous month, while the ILO unemployment rate for the 3 months through May fell as well to 7.8%, as employment rose by the largest amount in almost 4 years. So overall, very good news for the UK labour market. So those were our key stories for today. Let's take a look at the upcoming fundamental docket. Tonight, Australia posts a reading on inflation as well as a measure of new motor vehicle sales, which is followed by the Japanese Bank of Japan interest rate decision. Overnight, the UK releases a measure of housing equity withdrawal, and Switzerland posted ZEW economic expectations. The fundamental docket will be rather busy for the North American session as the U.S. releases data on its jobless claims, producer prices, its Empire Manufacturing Index, as well as Philly Fed Manufacturing Index, and overall industrial production. Canada, meanwhile, posts manufacturing sales as well as motor vehicle sales data. So that does it for today's broadcast. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.